Todd, I was noticing that our chairman of the Fed is meeting in front of, or speaking in front of Congress today. I thought of you. Haven't seen any comments yet, but thought of you when I saw that headline.
Of course you thought of me, because you know that I would really like to say it, right? But I won't. I'll be good today. But she has nothing to say. I mean, what is she going to tell us? How she's going to rig the economy some more, or how she's going to take advantage of more of the deflationary scenario that she created, or they're going to reduce the try to knock down the price of the dollar again because they ruined it the first time? She has nothing to say. Are we going to maybe we'll have negative interest rates? At the bottom line, Mark, is really what you're seeing here in the markets. This is the slowest day in corn and soybeans since Christmas Eve, wow. And it's the slowest day in 6 months. Other than that, the only one that's got a little action is the wheat market, but really just a really quiet market. And I think a lot of it really has to do, believe it or not, with who's speaking on that big TV set over there. Because again, everybody's afraid of what move to make next based on what she may or may not say and what effect that may or may not have on the dollar. Now, we know a couple of things for sure. We know that the dollar is going to probably start to work its way lower, which will be a great thing for our producers so they can free up some of the exporting market. But with that, we know with pretty good confidence, because the big major banks in the States are short dollars in very big quantities right now. They won't admit to it, but that's where their position really is. And they're telling you, because they own parts of the Federal Reserve, that private organization, that they're not raising rates. So if rates are going to stay here, then the dollars are going to fall.
All right. So, yeah, you look for interest rates to stay where they are for the rest of this year, maybe, or till maybe late fall, early winter?
I look for them to take away the quarter point they put and go back to zero. And I also look for a quantitative easing 4 program, because as far as this is done, this has been one of the biggest butcher jobs in history of trying to fix an economy, when you continue to try to push down the problem and keep pushing it away from you and hoping it'll go away. Unfortunately, problems never go away, and they raised into a falling market, which they had no business doing in the first place. So right now, they aren't doing anything. Most likely there'll be a drop and then another easing program, because it's becoming very problematic here.
Very good, Todd. Thanks for that. We're going to give our listeners and viewers one last look at the grain trade. We'll hold on, and we'll talk to you, obviously, about the livestock trade. But here again, one more time, numbers from the CME Group. A quiet day, as Todd says. I didn't realize that. One of the quietest volume days since Christmas Eve. March corn down 0.75 cents at 360 1/4. Soybeans on a quiet day as well. Currently unchanged for the most part. Nearby March is down 0.25 cents. Very, very quiet trade there. Now, wheat is higher on the day, has been higher. March Chicago up 3.5 right now, 461 penny, a couple of cents from their high of the day. Kansas City, nearby March contract, is unchanged, back to their quiet trade. And Minneapolis, the nearby March contract, is down 1.5 pennies. Cotton trade, we've been keeping an eye on that and had stories here. We've interviewed the folks from the cotton industry on our Market Day report. March cotton is up 13 right now, 58.77. The May contract down 8, 59.16. With that, we take a break, and we will come back in 60 seconds.